What if I told you that one burger could unlock the secrets of the global economy? Not a gold bar, not a stock chart, just a burger. Welcome to the fascinating world of the Big Mac Index, an economic lens that turns a fast food favorite into a crystal ball for global finance. It's quirky, it's clever, and it might just change the way you look at money forever. The year is 1986. The Economist, a British magazine known for distilling complex financial concepts into readable insights, decides to create a simple yet powerful way to measure whether global currencies are aligned with their true value. Their solution, not a complex formula, not a macroeconomic theory. A Big Mac was sawabi nanonin. Surihiwa one. Why? Because the Big Mac is one of the most globally standardized products on Earth. Nearly every country where McDonald's operates serves the same Big Mac, a beef patty, lettuce, cheese, pickles, onions, and sauce sandwiched between a sesame seed bun. The logic is simple. If a Big Mac costs $5.69 in the US and $8.17 in Switzerland, you might wonder why the difference. The answer lies in purchasing power parity, the idea that in an efficient market, the same goods should cost the same when priced in a common currency. By comparing local Big Mac prices, you can see which currencies are too strong or too weak relative to the US dollar. It's not perfect, but it's fun, intuitive, and often surprisingly accurate. Let's explore some 2024 data. Switzerland, a Big Mac costs $8.17. The Swiss franc appears overvalued. But Switzerland also has high wages, stronger purchasing power, and a strong service economy. Venezuela, $1.78 per Big Mac, a symbol of a deeply undervalued currency, reflects high inflation, political turmoil, and a weakened economy. United States, the baseline $5.69. Used as the reference point for comparing other currencies, Norway and Sweden, high prices due to high standards of living and taxation on fast food. Brazil, $4.81, and Australia, $5.07. Slightly undervalued, but relatively close to parity. These countries often hover near USD values due to economic integration and export-focused economies. But the Big Mac Index is more than just about currency. It gives us a window into how people live. A higher Big Mac price might signal higher wages, more expensive ingredients, greater operational costs, taxes, regulations, and rent. Lower prices might point to subsidies, currency manipulation, inflation control failures. Example, in Egypt, a Big Mac might be cheaper due to subsidies on bread and meat, not necessarily because their economy is weaker, but because of policy priorities. Or take Japan, where the yen has weakened in recent years. Even as tech thrives, fast food stays low-priced, offering insights into deflationary pressure. Let's say you're a student backpacking across Europe. You notice, a meal in Norway costs double what you paid in Portugal. Your Big Mac in Zurich, $8. In Budapest, $3.50. Using the Big Mac Index, you can estimate how far your money will stretch. Even professional economists and investors sometimes use it as a quick gut check when currency markets get volatile. Real story. A travel blogger once shared how they planned their meals and accommodation based on the Big Mac Index during a 12-month around-the-world trip. In Thailand, cheap Big Macs meant more budget left for excursions. In Sweden, it meant cooking at hostels to avoid blowing the budget. But let's not romanticize it too much. The Big Mac Index is a snapshot, not a full report. What it doesn't consider: labor cost differences, local taxation, rand prices, ingredient sourcing, cultural factors. So while it's a fun proxy for comparing currencies, it's not a substitute for in-depth financial analysis. In a world of economic complexity, the Big Mac Index reminds us of something powerful. Economics is not just about numbers, it's about people. It shows us how global forces like inflation, monetary policy, and wages affect something as universal as a meal. So next time you unwrap a Big Mac, take a moment. You're not just having lunch. You're holding a tiny sesame seed-covered story of the world economy.